Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Monday, the 17th of March, 2025. Hope you didn't get caught in some of that crazy weather. It's still going on. It's pretty nuts, in fact. I know I woke up this morning, we were in the 20s. We're going to be near 65, 70 degrees tomorrow. I mean, it's just crazy how it's up and down, and the rough storms with it, and the winds, they're unbelievable. All right, it's unbelievable, the markets. I mean, you had a two-day rally. You're trying to continue a little bit with it tonight in the Dow, in the S&P, not quite that game in the NASDAQ. We have some interesting things taking place with NVIDIA, where the chairperson, tomorrow's a big conference, and we'll see if he can boost that up. That will impact one way or the other what goes on with the NASDAQ because of the heavy weighting of NVIDIA in it. The dollar pushing the 103 level. Most currencies tonight treading water. They're not down very much. They're not up. They're just sort of hanging in there. Bonds and notes have been going flat, and it makes all the sense. What do you think we get in another day or so? You know, if you look down here, the Federal Reserve Bank, you're going to have the two-day meeting beginning tomorrow for monetary policy, along with an announcement and press conference on Wednesday. By the way, President Trump has picked Michelle Bowman, who's a Federal Reserve governor, to be your next, she will replace Mr. Barr, and she'll be the vice chair for supervision at the bank. She has to be approved by the Senate, but it should be a rubber stamp for her. U.S. housing starts and building permit data will come out at 7:30. Import prices will be at 7:30. U.S. industrial production and capacity utilization at 8:25. So, yeah, those are interesting reports. The housing will take most of the idea there, and we'll see what that does for the markets. Now the question is, of course, the president in more trouble with deportation of some Venezuelan gang members to Ecuador. And now they're saying that's illegal under the act that he has from 1798. I didn't even know such an act exists, and that he defied a court order. You know, at some point here, there is the court, there's the different branches of government. And the question is, do these courts have the right if the president invokes war acts? The problem I don't get is, what war are we in? Last I'm looking, the U.S. isn't fighting a war anywhere. So I guess the word war means domestic when gangs are infiltrating you. It's a novel approach to the law. Might work. I don't know. All right. So let's take a look and see what we've got with the markets. In the S&P, as much as you're getting a bounce, and I know there's relief out there, people feel it. Does that look like you're getting a real lot of relief on a weekly basis? If it does to you, you're not seeing what I see. When I look at the chart here on a daily basis, you can see what the market did, and we're getting a bounce. Could we get a third bounce of this break? Of course. Could we get 50%? Yes. Much more than that's going to be very difficult. So, you know, you went from 61.66 down to 5,500. So let's assume that maybe you get to the 5,800 level for problems. I'm just giving you an idea, you know, right off the top of my head. That number fit in, by the way, because I was looking at where the 18-day average of closes is, 57.8690. and 58.4340 for the 200-day average. So that fits right in with those numbers. So yeah, you can get a relief rally. Does it mean you've changed anything? No. Why? Because the tariffs are coming April 1st and 2nd, unless countries are negotiating and finding a way to not get reciprocal tariffs put on them. There's many things going on. I was reading an article today about Canada, Bombardier, that makes a number of military aircraft out of U.S. jets. And they get components from 47 united individual states. In addition, they have things made in Mexico. Where do they go on the reciprocal tariffs? Do they get a break because of that? Who knows? I don't know how this all works. So we're going to find out just what this all means. It is confusing, and I can see what the market's doing. But, you know, what's going to happen is the hammer's coming. Is Europe going to give up on their car tariffs and let U.S. cars in? They might do that. Why not? Do you really think it's going to matter? Okay, if they want to buy American cars, then they'll buy them. Well, we love in America European cars. The tariff's going to make it difficult. So you get to a point where the market says maybe the worst is built in. That's what I'm saying. And on the other hand, you get to the point where the hammer's yet to fall. It's two parts. This was the hammer falling. This is the realization that things are going to happen over the next 2 weeks. And now the question is, can they be good or bad? When we look at the S&P from here, you can see it made a lower low, higher high. So now you don't have a trend. You have finally broken this pattern where you had lower highs. I'm pointing to each of them for you. And you broke that pattern. So now we have eased into an area where until this low is taken out, we have sort of a trading bottom. I didn't say the bottom, a trading bottom in place. The resistance, the 18-day average up to, as you can see, the 200-day, and you lost the bearish embedded reading. Now, one of the strongest tools I have is when you lose a bearish embedded reading, just the way that you did on the close here, unless the market re-embeds on Tuesday, which it's so far not trying to do, so far, but it's only 2 hours or 1 hour into the trading. Yeah, no, 2. We're pushing 7 o'clock. So 2 hours into the trading. It generally doesn't re-embed. It could, but it generally doesn't. That means to me prices do want to rally into this area. That's all I can tell you. I know no more than that. It is certainly for me not an area to press the short side. And in fact, I was looking on Friday to go short in the Russell. Today I could have done a better number, but I looked at what was going on and I said, if you lose the reading, you're going to get that rally. So I backed away, and it was a smart move for my subscribers. Higher lows, higher highs, and you lost the reading there. You lost the reading there. Didn't set up a trend of any type. You still have a market that is giving you a bounce, and that's all that it is. I don't see a change of anything there. And here, so I can make an argument that all of these indices can rally to their 18-day average to run out of momentum. That's the first look that I have in the market. We'll see if that plays out. You lost the bullish reading back here. Do you see that? And you finally got down to the 18-day moving average of closes here. Same play at work. Same here when you lost the reading and you finally hit it. It took a bit of time, but it worked. The market came right down to those numbers. In the dollar index, you have a fully embedded reading. It tells me that until you get the red line to be over 21 on rallies, the pros look to sell this market. And that's what I still think is going on. In the euro, you have a bullish reading, which tells me that on breaks, the trade is still buying the market, looking to see can it drive it even further. There'll be a number that it gets to the point where it says it's rallied so much it's too high, but we're probably not there yet. British pound has had this bullish reading all the way through, and now you're getting a bullish crossover where the 18-day average just got over the 200. So we had the first crossover back here, and you see how the market rallied. Now you're getting the second. I wouldn't be surprised that there's a little bit more in this. I'm not looking for a heck of a lot out of that. In the Bitcoin area, you have higher lows, higher highs, but this is no more than a rally in a market that has downside bias. Notice how the market has stayed under the 18-day average of closes. When you get this pattern where you break the downtrend, the rally often goes to the 18-day average or the closest main moving average and then stalls. This is the 18 right now. That's what I'm looking to happen. This is exactly what happened right here. So let me just show you, walk you through here in the Brent. This is a market with higher lows, higher highs, oversold. So it broke the pattern of the lower highs. Do you see that? And as you get through them, and let's see if I can give you one more, the objectives, the 18-day average, as it's the closest main moving average, and notice how the market's stalling there for this time being. That's basically how the market gets itself neutral, and it goes, I'm no longer oversold. I've negated that. What am I going to do next? And that's why the 18-day average to me is such an important moving average. You may use a 20, a 21. There's little differences in them. It's all the same concept. And by the way, I have years of working with it, and I chose the 18 for a very specific reason. When we look at the WTI, higher lows, higher highs, same thing. So you have a market that was trying to embed, loses the reading, and boom, comes right up to the 18-day average. Heating oil, you're flirting tonight, not during the day. Let me just show this to you. You still finished with the market embedded. But now a warning sign for you at night as we look at this market, are you losing this reading? 22. Intraday losing, it's not losing it. Later in the day, it will be if the market keeps it up. A rule of thumb that I sometimes use, if it's losing it by midday, why not get straight stops in the market and don't let the market get away from you rather than lighting candles and crossing your fingers. Oh God, make the market go my way. How many times have you done that? I promise you, I have candles from Notre Dame in Paris. I do. My wife cracks up and I'll let him, please make this trade work. It's terrible to use that for it, but you laugh at yourself. And if you can't, shame on you. When you look at natural gas, lower highs, lower lows, and you can see the resistance is right through here. And as the market is coming down, it is oversold. You've heard what I've told you. I thought that the cold weather was over as you were peaking up there. And I said, you don't want to play this game on the long side. Be careful. It can bite you fast. It's exactly what's occurring. But we talk about this and so much more at Linn because we write about it all day long. We cover the whole spectrum of the markets. Now, we're covering futures primarily with option strategies, spread strategies, and we're going to each of the sectors in the market. So it's the stock indices, it's the currencies, it's the interest rates, it's special reports, it's the grains, the soft markets, the meat markets, you name it, we're basically covering it. And we don't do it with just technical analysis. We write about the fundamentals, what's moving the market, what are the strategies, what's the commitment of traders' reports doing, where do we see all this headed, what do we see in the special reports that we put out. You get the whole array. So if you haven't seen what we do, you might want to take a look at it. It's made available to our customers, but we let other people see it so that they have a reason to become a customer of ours. How do you get this? It's simple. It's free. You go to iraepstein.com, right through here. Go to the top left, free offers. You can move your cursor to the top here. That'll take you right there as well. In the meantime, have yourself a great evening. I'm Ira Epstein. I'll see you in the morning. Take care.